All right, Greg Branch, you're still, from my notes, calling for an October-style demise. Those are your words.
I am, and we're going to get that one of two ways, Scott. I believe that this debt ceiling, whatever we want to call it, debacle, will be resolved in one of two extraordinary ways. It's far too little and far too late at this point. We're about 3 weeks away from the X date, or the binding date. And typically the market actually doesn't react until that time, by the way. And so I agree with Mike that we'll probably see nothing either way tomorrow, because in 2011, which is likely our best case scenario, we saw 20% market loss in the 2.5 weeks preceding the X date. And we're not quite there yet. But I do believe that this will resolve in one of two extraordinary ways. Either we will default, and I know that we're all saying that we won't because we never have, which is not necessarily a solid base to build an argument on. But if we don't default, I think the president will have to oversee or supersede Congress. Either one is bad. Either one likely results in a debt downgrade, which then triggers likely, or at least exacerbates, a boiling problem in CRE at the regional bank level. I think we'll see more SFBs. I think we'll see more First Republics. I think we'll see the credit markets likely freeze. And therefore, a recession will be inevitable as unemployment shoots to around 5% and growth comes to a halt.
That's a bit dire, no? I mean, even if it goes over the cliff, so to speak, you paint a picture in which it would stay over that cliff for an extended period of time, for all of those cascading effects to take place. That sounds a little overly negative to me.
It could be, and I didn't address duration, actually, and you're exactly right. How deep and long a recession could be would depend on the duration in which we're in default. If we quickly resolve this shortly thereafter, I think we're still subject to a downgrade, which does increase borrowing costs across the board, Scott. And so at the end of the day, the Fed will wait because they want to see how much of their work is going to be done for them. Right now, the labor market's fighting the Fed and the consumer's fighting the Fed. And thus, we've seen not only a strong first quarter, but we've seen the rate of disinflation slow pretty considerably. So something needs to be done in terms of getting inflation where the Fed wants it. The Fed just doesn't know yet if it has to do it or if Congress will do it for them.
I mean, do you think the Fed's done? Are they done raising rates, yes or no?
They are not if we reach a debt deal. They may be if we do not and we default.
I mean, but they already know that there are credit issues to deal with. That's an interesting perspective. I appreciate that, Greg. Thank you. We'll talk to you again soon.